Hi, I'm Steve Strazza, and I'm here with JC Parets, the founder of Allstarcharts.com. Today we want to talk to you guys a little bit about gold. JC, what are you seeing in the shiny metal right now?
I'm seeing that it's going up, right? And I think it was the chart report a few weeks ago. I forget who the quote was, but the quote was, the most bullish thing an asset can do is go up. And you know, I'm a firm believer that markets trend, and that's why technical analysis works, because we're looking to identify the direction of the primary trend, and gold continues to work, but it's not anything new. It's been working all year. What's interesting is that gold continues to work in the face of a strong US dollar, and that I definitely didn't see coming.
So let's touch on that a little bit more. Last week we had the FOMC meeting, right? So a lot of assets are moving based on the Fed's decision. The dollar was one of them, like it typically is. We saw it quickly spike back above that key $98 level that you've been talking about, and then once again fail and put in what looks like another failed breakout, which I think is the third or fourth just in the past few months. So what are you seeing there, and what do you think this means for the direction of the dollar, and what impact should that have on gold?
It's funny, you know, a lot of people like to focus on what the Fed says or what the Fed does or the GDP number or unemployment or whatever the data point du jour might be. But I mean, we don't give a damn what the data point is. We care what the market thinks about it. So we're more concerned with the reaction. And I've been in this business long enough to see knee-jerk reactions post-events that then fade, and those come at key pivot points, right? So after FOMC, dollar ripped and then faded over the next couple of days, went out at the lows of the week on Friday, and then gold continues to show strength. So the question is, are gold and the dollar going to continue to move higher together, or at least remain strong together? And my bet is that that's not the case. It's going to revert to traditional correlations, and I think that it's really the relative strength in gold in the face of a dollar that's not necessarily going up, but certainly not falling. I continue to see that as a heads up of much higher gold prices, and in turn, weaker US dollar.
That makes sense. So could you envision an environment where gold and the US dollar trend higher together, or is this zero sum, it's binary, one has to go up, the other has to go down?
Yeah, I mean, the dollar hasn't fallen this year, right? It just hasn't gone up. It's done well against emerging markets, but against developed markets, it's pretty much flat for the year. So, you know, I would say, just to play devil's advocate, just go back to the 90s when gold broke out. That was just a huge head fake, and gold just got slaughtered into the late 90s, and the dollar ripped into the end of the century. You know, that can certainly be possible here, and this could be a failed breakout in precious metals. That's just not the bet that we're making right now. Betting on higher gold and silver prices has been working. Precious metals on a relative basis continue to work, and that trend is certainly in place, so you can fight it if you want. But for me, if gold's above 1,400, I think we got to be long, continue to be long. And on the currency front, if dollars are below 98, as we continue to fail there, you know, I like weaker dollars and stronger gold for sure.
So how about any other risk appetite or ratio analysis indicators that you look at that help you determine the direction of precious metals? For example, right now, I know the yen looks really good and it's breaking out versus the dollar, while something like silver and the silver to gold ratio are still kind of lagging and maybe not showing you the bullish signals that you would want to see for precious metals to move higher. What do you think about those two indicators?
What's interesting is that yen futures over the last several years, they really move tightly with gold miners on a relative basis, right? That's the real correlation. But I think that just goes back to the US dollar, right? If yen is outperforming US dollar, it's more of a dollar weakening sort of story, which in that environment, precious metal stocks should be outperforming. So I think of all of these sort of supplemental ratios, right now, the one that's the cleanest that we're keeping an eye on, because remember, correlations are always changing, right? So right now, the one that's working is gold miners on a relative basis and yen versus the US dollar, right? They really do look together. Again, I think it's more of a dollar story than anything else, but I think the yen correlation with gold miners on a relative basis, definitely the one that we're focused on. And if the dollar falls apart, and yen's going higher, precious metals are outperforming, I think all of that fits into the long precious metal story.
Sounds good. So gold higher, dollar lower. We'll check back in next week for more.
All right.